The three biggest mistakes basement landlords make. Tune in. Hello, everyone. My name is Sylvia Ho, and I'm a financial landlord consultant. I work with landlords to help them save money so that they can pay less interest to the banks and they can pay less taxes to the government. So, what are the three biggest financial mistakes basement landlords do? So the first thing that I see on a constant basis is using your own personal cash to fund the renovation to put in a basement apartment. So let's just say putting in this basement apartment is $40,000. They will save the money and then they will use that 40 grand to put in the basement apartment. Please stop doing that, because whenever you do that, you are actually making the government richer. So never use your after-tax dollars, your after-tax savings to fund the renovation. So there are two reasons. The first reason is the money that you save, that $40,000, that's after-tax dollars. You've already paid taxes on that. Don't use the money that you've already paid taxes on to go invest in a basement apartment, because the whole purpose of a basement apartment is to make more money. Because the fundamental rule behind CRA is whenever you borrow to invest with a reasonable expectation to make money, you can deduct the interest costs. So if you use your own savings, you can't deduct any interest costs, right? So what you're going to do instead is you're going to borrow the money for the basement apartment. So you're going to borrow the cash. You're going to borrow the cash against the best place to borrow it is against the equity that's sitting in your owner-occupied home. All right. So number one mistake is using your own savings. Please stop using your own savings. Instead, borrow the loan to put in the basement apartment. So mistake number two, I constantly see. Now that new landlords or landlords who want to put in a basement apartment understand that we must borrow the down payment, must borrow the renovation money. What they're going to do is they're going to go to the bank and they're going to say, hey, lender, I have a $500,000 mortgage with you. I would like to borrow $40,000 so I could put in a basement apartment. Can you refinance, do one mortgage for $540,000? Please don't do that. Don't combine your $500,000 mortgage that is not tax deductible with the $40,000 mortgage, which is actually tax deductible, because you're using that to go make more money. What you're going to do instead is you're going to do two stand-alone mortgages, one for $500,000 and one for $40,000. So the $500,000 is your own personal debt, and the $40,000 is now tax deductible debt. You can easily track the interest costs on that $40K, and now you can deduct it off of your taxes or your T776. So when you go work with your accountant to do your income taxes, you're like, hey, accountant, I have interest costs on the $40,000 that I used to put in the basement apartment. I would like to deduct those costs. And therefore, you will have extra tax write-offs. And by having extra tax write-offs, your net income is much lower. Okay. So do banks offer this two-part standalone mortgages? Yes, they do. It's part of their product selection, but they don't actively promote it. Because branches and a lot of mortgage agents, I used to be one of these mortgage agents as well, they're order takers. I want to do this. Okay, no problem. I'll give you this. So you go to the drive-through at McDonald's, you order a Big Mac, you get a Big Mac. Well, hopefully, you get a Big Mac, right? So those are called order takers. And I used to be one of those order takers, but I'm not an order taker anymore. With 24 years experience under my belt, I am a strategist. I like to understand the bigger picture. What is the bigger picture? Why do you want to put in this basement apartment? Most of the time, people want to put in this basement apartment because they want the extra income. Okay. So work with a strategist. As a financial landlord consultant and a mortgage agent for the last 24 years, I'm a strategist. I want to understand the bigger picture. And then what I will do is I will create different plans for you based on your financial goals. And I will ensure that you have the right mortgage structure, the right mortgage product in place to get you to those goals. As a financial landlord consultant, my ultimate goal is to help my landlord clients become mortgage free, reach and attain mortgage freedom on their owner occupied home. Can you imagine having a strategy in place for your own personal finances where instead of taking 30 years to pay off that 500K mortgage, it will only take you 22 years to pay off that mortgage? What would you do being mortgage free, knowing that you will be mortgage free 8 years earlier? All that interest that you're saving to that you would have paid the bank by applying the strategy, you will save that money. And now you can redirect those savings to future investments like retirement or helping the kids. Okay, I went off on a tangent there, but mistake number 2 is merging the debts, $500,000 and $40,000. Do not merge them into one big mortgage of $540 when you do the refinance. Put it as 2 standalone separate mortgages. And the lenders offer that, but you have to ask for it. All right, now, part of mistake number 2 is now that you have 2 separate mortgages, one for $500,000, one for $40,000 for the basement apartment, and you can write off the interest costs. I want you to work with an accountant who understands real estate investing. Please don't go to those individuals at H&R Block or to your local community center, because there are nuances that you can take advantage of legally to write off stuff that will put more money in your own pocket. So individuals at, the H&R Blocks and stuff, they know the basic taxes, right? But when you become a landlord, you're actually running a landlord business, right? And you're deemed to running a business, and it's a landlord business. So that's how CRA is going to look at you. So when you're deemed to running a landlord business, you want to be able to take advantage of all the deductions that you can take advantage of by running this business. Previous to becoming having a landlord business, you may not be privy or have access to these types of deductions. So it can be costly if you don't work with an accountant who understands the mindset of what you're trying to do. All right, so mistake number 1, let's just recap. Mistake number 1 is using your own savings, borrow the money instead. Mistake number 2 is merging the borrowed money for the basement apartment. You keep it absolutely separate. And you also use an accountant so that you can properly deduct your interest costs and any deductions associated with running a landlord business. Now, mistake number 3. This is the most costly mistake. And it's a mistake that 99% of Canadian landlords are doing, where they are not running their landlord business efficiently. And what I mean by efficiently is they're not taking advantage of the fact that they're getting $1,800 in rental income. So I'm going to tell you the proper way to run it, where you are going to save, and I'm not saving money. And I'm not talking about like $10, $20, $100. I'm not even talking about thousands of dollars. I'm talking about tens of thousands of dollars in savings. So this is how 99% of landlords run their business incorrectly. What they do is they take the rental income, they deposit into a bank account, and from that bank account, they pay all of the rental expenses. Okay, so let's just say a landlord gets $1,800 in rental income. They will portion off $800 to pay that $40,000 loan, and they'll be left with $1,000. And then they take that $1,000 and they prepay their mortgage. And they're like, oh, this is great. I'm watching my mortgage melt away. That's not the most efficient way to do it. This is the most efficient way. What you're going to do is you're going to take your $1,800 and you're going to prepay your $500K mortgage every single month. You're going to prepay your owner-occupied $500K mortgage by $1,800. And then what you're going to do is you're going to use a readvanceable line of credit to pay that $800. And then you're going to rinse and repeat every single month. By using the line of credit to pay the $800 mortgage on the $40K mortgage, you're going to now create extra tax deductions. And with these extra tax deductions, you're going to get tax savings. And with those tax savings, you're going to pay down your mortgage even faster. So you're going to prepay your mortgage $1,800 times 12 and your tax savings because you use the line of credit to pay for the rental mortgage, the basement rental mortgage. By doing these extra steps alone, it does not cost you anything. It does not change your family lifestyle or your family budget. You can still go on vacation. You don't have to pick up a second job. All I'm asking is that you reallocate the way you run your landlord business, and now you can become mortgage free. You can attain mortgage freedom 8 to 12 years earlier than planned. Now, CRA is very, very specific in how you do rental cash damming. Okay. When you are applying the strategy of rental cash damming, you have to be super organized. So it's not for everybody. If you aren't super organized and you want to be super organized, I can help you with that. Okay. You have to document every single step that you do every single month, and you have to work with an accountant. Now, if you like to learn more about the benefits of rental cash damming for your specific business, landlord business, please comment below me. And what I'll do is I'll send you a link to book an appointment with me for a mortgage freedom strategy session. And in this 45 minutes, we'll come up with a real plan for you on how you can attain mortgage freedom much, much earlier than your current amortization. If you love what you hear every single Wednesday, where I teach you tips and tricks on how to be an efficient landlord and put money in your pocket, please like, please comment. It will encourage me to do more of these videos every single Wednesday. And if you are watching on YouTube, please subscribe so that you're notified every time I put up a new training video. Thank you so much for listening, my friends. My name is Sylvia Ho, and I'm a financial landlord consultant. I'm also a mortgage agent for the last 24 years and a landlord myself. I'm also known as the cash damming queen. Until next time, take care.